Today we dive into the wisdom of one of the most successful investors in history, Mr. Warren Buffett. Known for his astute investment principles and strategies, Buffett has etched his name in the annals of financial history. His unique approach, often referred to as value investing, involves seeking out undervalued stocks based on a company's intrinsic worth. Unlike many, he doesn't get swayed by short-term market fluctuations. Instead, he focuses on the long-term potential of a company. It's not just about picking stocks for Buffett, it's about understanding the business behind those stocks. He takes into account factors such as return on equity, debt-to-equity ratio, and profit margins. For him, it's not just about the numbers, but about the story they tell about the company. Now let's uncover the magic behind Warren Buffett's investment strategy. Before we delve into the strategy, let's take a moment to appreciate the man himself. Warren Buffett, often dubbed the Oracle of Omaha, began his journey in the world of finance at a very early age. Born in Nebraska, Buffett bought his first stock at the tender age of 11, and by the time he was 15, he already owned a small business. Despite his early success, Buffett never stopped learning. He studied under the renowned economist Benjamin Graham at Columbia Business School, absorbing the principles of value investing that would form the bedrock of his investment strategy. From there, Buffett returned to his hometown to start his investment partnership, which eventually morphed into Berkshire Hathaway, a conglomerate now owning a diverse range of businesses from insurance to candy manufacturing. Through his astute investments and long-term vision, Buffett transformed Berkshire Hathaway from a struggling textile mill into a multi-billion-dollar enterprise, amassing an incredible fortune along the way. Today, he's one of the wealthiest men on the planet, known not just for his wealth, but also for his humility and philanthropy. With such an inspiring story, it's no wonder many are eager to learn from his investment strategy. Warren Buffett's investment philosophy is rooted in the concept of value investing. This approach is like a treasure hunt, where the investor looks for undervalued stocks, those hidden gems in the market whose intrinsic worth is not fully recognized by everyone else. For Buffett, these are the companies that hold the most potential. Now, the term intrinsic worth might sound a bit nebulous, but it's essentially the true, inherent value of a company, regardless of its current market price. This is where the beauty of value investing lies. It's not about riding the waves of the market's ups and downs. Instead, it's about finding those sturdy ships that can weather any storm and sail steadily towards long-term growth. But how does one find these ships, you might wonder? Well, this is where Buffett's philosophy takes a slightly different turn. For him, investing is not just a numbers game, it's also about understanding the business behind a stock. He emphasizes the need to delve into the company's operations, its products or services, and its competitive standing in the industry. Buffett's approach is like being a detective, where every piece of financial data, every news article, and every company announcement is a clue that could lead to a valuable investment opportunity. He scrutinizes factors like return on equity, debt-to-equity ratio, and profit margin to evaluate a company's performance and its potential for future growth. However, Buffett doesn't just stop at understanding the business. He also places great emphasis on the company's track record. He prefers established companies that have proven their worth over at least a 10-year period. For him, it's not just about what a company can do, it's also about what it has done. But perhaps the most defining aspect of Buffett's philosophy is his patience. He doesn't rush into investments. Instead, he waits for the right opportunity, the right company, and the right price. This patience, coupled with his focus on understanding the business and its long-term potential, forms the core of his investment philosophy. In essence, Buffett's philosophy is about patience, understanding, and long-term vision. It's about looking beyond the short-term fluctuations and focusing on the bigger picture, on the intrinsic worth and long-term potential of a company. Now let's delve into Buffett's key investment tips. Firstly, wait, then pounce. Buffett advises patience in the investment world, urging investors to analyze a company's intrinsic worth, wait for market undervaluation, and seize the right buying opportunity. The second tip is stay the course, emphasizing the marathon-like nature of investing, prioritizing long-term potential over short-term fluctuations. Lastly, pick businesses, not stocks. Highlights. Buffett's strategy of understanding a company's operations and growth potential before investing, emphasizing business fundamentals over mere stock numbers. These tips embody Buffett's approach, a mix of patience, long-term focus, and a deep understanding of business. Investing is not a shortcut to wealth. It's about informed decisions, calculated risks, and as Buffett noted, the transfer of wealth from the impatient to the patient. It's not just about the tips, it's about how they are applied. That's where Buffett's methodology comes in. Warren Buffett's approach to investing is a well-honed process, developed over many years and founded on solid principles. It's methodical, logical, and grounded in deep understanding and analysis. Key facets encompass company performance, emphasizing sustained success, company debt, endorsing prudent financial management, profit margins, giving precedence to operational efficiency, public companies, chosen for heightened scrutiny and transparency, commodity reliance, steering clear of susceptibility to price fluctuations, and value, focusing on undervalued businesses. Buffett's method consistently identifies successful investments, underlining the potency of principles over transient market shifts. This underscores the impact of patience, understanding, and systematic analysis in achieving lasting investment success. One can learn a lot about an investor by looking at their portfolio. Let's take a peek at Buffett's top holdings. Warren Buffett, the Oracle of Omaha, has always been a fan of blue-chip companies, ones that have stood the test of time and consistently deliver value. His portfolio is a testament to this preference. A substantial chunk of his investments is tied up in companies like Apple, a tech behemoth known for its innovative products and loyal customer base. He also holds a significant stake in Bank of America, a leading financial institution in the United States. His other notable holdings include American Express, a global services company, and Coca-Cola, a brand that needs no introduction. These companies have a long history of profitability and a strong brand presence, aligning perfectly with Buffett's investment philosophy. Buffett also owns shares in Kraft Heinz, a multinational food company, and Moody's, a business and financial services company. These companies, like his other holdings, have a long track record of stable earnings and a strong market position. These holdings reflect the principles Buffett adheres to in his investment strategy. Warren Buffett's wealth stems from a deliberate investment strategy honed throughout his extensive career. Rooted in value investing, he seeks undervalued companies based on intrinsic worth, prioritizing long-term potential over short-term market fluctuations. Known for patience, he carefully selects opportunities and holds onto investments for extended periods. Buffett's emphasis on understanding businesses before investing led him to favor established companies with a track record. Additionally, he underscores the value of investing in personal knowledge and skills, considering it the most profitable investment. In essence, Buffett's strategy is a long-term wealth-building plan, not a get-rich-quick scheme. What does Warren Buffett consider the best investment? Surprisingly, it's not stocks or real estate, but rather oneself. According to the Oracle of Omaha, investing in your skills, knowledge, and well-being is the most profitable choice. This can involve professional courses, reading for self-improvement, or indulging in a joyful hobby. Buffett believes the enduring returns from self-investment surpass those of financial ventures, providing skills and knowledge that withstand market fluctuations. This approach fosters personal growth, enhancing the ability to make wise financial decisions and ultimately build lasting wealth. In Buffett's view, the best investment advice isn't about stocks or bonds, it's about investing in personal growth. In summary, Warren Buffett's investment strategy centers on value investing, emphasizing a company's intrinsic worth over short-term market fluctuations. Key points include patient investing, choosing businesses over stocks, and focusing on long-term potential. Buffett's methodology involves evaluating company performance, considering factors like return on equity and debt. His top holdings favor established companies with at least a 10-year track record. Overall, the strategy reflects Buffett's journey to wealth, emphasizing self-reliance, patience, and understanding. The beauty of Buffett's approach lies in its simplicity and long-term vision. Happy investing!